back, and today we're going to talk about some few things that are actually very hot in the market. So first of all is US and Europe trade deal eases the market fear. So let's actually go on and read an article today. Europe and US agreed trade deal with 15% tariff on European exports to America. The first video that we made was with Japan. So Japan and America had an amazing agreement, and they had a 15% tariff. And the reason why I said that it eases the market fears is because there was a threat of 30 to 20%, maybe between 25 to 30% tariff. So that could have actually brought in a lot of fear in the market. And when you have a lot of fear in the market, that can be a bad news, and the bad news can cause the market to actually crash. So thank goodness this is actually a good news. If you want to actually read the whole detail, it's on the BBC News, and you can read about this. That is half. So we have that is half of the 30% import tax rate Trump has threatened to implement. So yes, there was a threat of 30% tariff, but thank goodness it is actually now half to the 15%. Furthermore, he has struck tariff agreement with the UK, Japan, Indonesia, the Philippines, and Vietnam, although he has not achieved the goal of 90 deals in 90 days. So there was a plan, in my opinion, for 90 deals in 90 days as well. So this is actually a very good article. I'm actually highlighting some of the things that I think are pretty amazing. So the vehicles that are going to be imported from Europe, there's a lot of deal going on, which the most important is that Trump said Europe will boost its investment in the US by $600 billion, including American military equipment, and spend $750 billion on energy. So there is a trade-off between vehicles. Now, the effect. What is the effect? Let's actually talk about the effect of the deal. Coming back into your chart right now, SPX is moving really high, and today SPX is at the record high as we speak right now. So 6388.65 is one of the biggest price achievement at the moment. But I'm actually going to tell you when is SPX going to be expected for a correction. So you're looking at a data that is coming in for the monthly time frame especially, and it has been just climbing and climbing all the way to the upside. And you can see when the dips happen, they happen big time. You have one of the biggest dips right here, another big dip right here, another dip, another dip, another dip, another dip. So when do we expect to see one more dip? So I don't think in July we're going to have a dip, and I don't think in August we're going to have a dip, but there is a month that I expect to see SPX going and dipping down, and that is the month of September. So the thing is, we're gonna go to September probably. I don't know if okay, so just bear with me for a second. We're gonna take Alt and G. Okay, Alt G, it's not going back, so I'm actually gonna do this manually. If you look at the prices of S&P, we're actually going to study this from 2020 so that I can actually be able to show you. So what we're going to do is we're going to go back in. All right, so let's do this for September or 2020 here. So this here, September 2020, you can see that in September we had a red candle just right over there, and then in 2021 in September another red candle, and then we had another September. So basically in 2022, so where's 2022, you can see another red candle in 2022 as well in September, of course, and then we had another red candle in 2023. In 2024, we didn't have that much of a red candle. It was just a very normal price. So in my opinion, we could still have August that can move up, and then September, it can be red. Maybe even in October, we could still have another red here, maybe down a little bit of a dip down to 6,085, and then eventually try to push back up again. On the other hand, we do have DJI, Dow Jones Industrial Average Index, and this one as well has a resistance that is actually trying to break on the daily time frame. So let's talk about this resistance here for in particular. So right now on the daily time frame, I'm actually back into the daily, and you can see that this daily time frame is showing that DJI has been rejected one time here. It has moved to the downside, been rejected the second time, moved down, another third time, move down, and another fourth time to move to the downside. If it breaks, you're going to be super bullish and you're going to continue to the upside. Otherwise, you could see an average drop to nearly 41,908 which is pretty much the place where you have one support here, another price interaction, another price interaction here, another price interaction. Our next conversation is going to be AI sector and tech earning power market momentum. And before we talk about this one, do make sure you check the comment section for our Telegram group. Join that in order for you to learn more about stock market news updates. Various different educational content is going to be posted over there. So do make sure you join that. And earning from AI linked jumbo caps like Alphabet, Microsoft, and Nvidia continue to fuel the market optimism. Alphabet earnings surprised positively on AI spending, while Nvidia recently became the first company to exceed a 4 trillion market cap. In total, over 150 S&P firms are reporting earnings this week, including Meta, Apple, and Amazon. The winners and losers in the Europe and USA trade. According to BBC, Trump is one of the biggest winners. Of course, he has been able to, connect and win this whole trading deal with the European, and it has been something that has been ongoing for quite some time. But some of the losers are, number one, U.S. consumers. And the U.S. consumers are going to be losing for the obvious reason that is written in this article, of course. But one thing that, in my opinion, is going to be one of the biggest losers is the car makers in Germany. So Germany, I'm just going to leave this one here, is that whatever this 15% tariff has been imposed, it can actually cost the German automotive industry billions annually. So we're talking about losing a lot of money by the end of the day. But the car makers in the US are actually winners, right? So American car maker received a boost when they learned that Europe was dropping its own tariff on US made cars from 10% to 2.5%, right? So it has actually been dropping. This is actually a 7.5% drop for the US. Many of them are actually assembled abroad in Canada and Mexico, and Trump subjects them to a tariff of 25% when they're brought into the US. That compares with a lower tariff of 15% on Europe vehicles. So US car makers may now fear being undercut by European manufacturers. And there are so many other different winners and losers. For example, the US energy is going to be the winner. And this is a big one because Trump said Europe will purchase $750 billion in the US energy in addition to increase overall investment in the US by $600 billion. We will replace Russian gas and oil with significant purchases of US LNG, which is liquefied natural gas, oil, and nuclear fuels, said by von der Leyen. This will deepen links between Europe energy security and the US at a time when it has been pivoting away from importing Russian gas since its full-scale invasion. And by the way, we do know that Russian and Americans are not very good. It's almost saying like it's an oil and water kind of a relationship between USA and China. Our next topic is going to be US margin debt has exceeded $1 trillion. So here's your chart right now, and let's open up the chart, zoom in into a little bit. And since 1960, this US margin debt has actually been on an uptrend, right? So it's in a bull run of the debt. But this time we have actually crossed $1 billion, which is actually $1 trillion. So this is happening for the first time, and it's actually peaking out. Everything is peaking. And as I said in the earlier video, that keep an eye on September, because September things may go bad. And at least for August, we do have all this Europe and US trade deal that is going to be very good for the market. But after that, we do not know what exactly is going to happen. So there are so many comments here on Reddit as well. If you want to actually see the whole conversation, you can check it out. I want to see a zoomed in chart showing debt to GDP. But the reason why I showed you this is not really what people comments really are. The reason why I showed you this is because, well, now, since recent figures show U.S. margin debt has exceeded $1 trillion, it actually indicates a speculative trading and elevated leverage among investors. When market reverse, margin data debt can accelerate sell-off as lenders force selling. So the people who are giving debt, right, the lenders, when they start to do some sell-off, and when you have a large increase in margin, right, so high margin levels magnify both gains and losses as well. That can lead to sharper volatility and risk of forced liquidation during sentiment shift. So if you're a beginner, you really have to trade carefully with leverage and focus on fundamentals rather than short-term momentum. And I would actually say be very careful in the next 2 months, because a sell-off may happen. As I showed you, the margin debt is high. the S&P is high, Dow Jones is high, and then a data shows that September can actually be very, very bad. Our next topics are going to be the meeting between Donald Trump and Jerome Powell. So Trump has been visiting the Fed, and he has been talking to Jerome Powell. And there is an article, very interesting article, that maybe the war between these two guys is actually far from over. And I'm actually going to tell you the whole thing about this, conversation that they had. I think the main takeaway is simply that Trump wants the Fed to actually lower their interest rates. Now, if the interest rate actually does lower a little bit, that is going to be good for stock market. It's going to be good for crypto market as well. And you may actually see a very good, healthy rise in the market one more time if the interest rate start to lower one more time, because we do know that if the interest rate starts to increase, even generally in your life, day-to-day life, you're going to notice that a lot of things are going to get very, very expensive, right? Your groceries are going to get expensive, your bills are going to get expensive. But if we do see a decrease in the interest rate, we are going to see an amazing, healthy, stable, economical market all over the world. These are some of the updates today regarding the market, and do make sure you check the comment section and the description of the video and join our Telegram to stay up to date with the future posting. Or if you have any question, if you need any guidance, we're here to help you on the Telegram. So do make sure that you give us a follow and join our community. So that's it. We're going to see you with the next one.